if you're obsessing over trading psychology, you are wasting your time. No amount of trading psychology is going to make you a profitable trader. The only thing that is going to be refining your edge, making these trades that have statistics backed behind them. No amount of, oh, well, if I just didn't exit here, if I just, got in earlier, it would have worked out. That stuff doesn't matter. Psychology does matter once you do have an edge, and I'm going to go into that in this video, how to get your edge, go over some sample edges that you could look into. But guys, I'm telling you, psychology does not matter as much as you think it does. You will have the confidence to take these trades once you do have an edge. If you don't, there's a reason you don't have confidence, right? So I'm saying all this, psychology doesn't matter. Okay, well then what does actually matter? So what matters first and foremost is going to be developing your edge. And we're kind of go through the step process around that. A lot of people, number one, they think edge is some kind of crazy thing that only quants can get. And that's just not true, right? A lot of these bigger firms, they are constrained by these trades because, they might be billion-dollar funds. They can't get out of the market like we do, number one. Number two, their time horizon isn't normally as short as intraday trading. Now it can be, which these HFTs and things. But there is edge to be had in the market. The market is not extremely efficient where you're never going to find any edge in it, especially if you're a smaller trader. There's a bunch of stuff you can get into. Now let's just go over an example of edge real fast. So this one's just going to be breakouts on Tesla. Let's say, hey, the only thing I like trading is breakouts. And what I want to see before a breakout, I want to see at least, let's say, an 8-day consolidation. I want to see, a bunch of value overlap. Again, you're going to want to learn TPO. That is another thing I'd recommend learning. But you see a bunch of value overlap. Let's say here, right? So we break out of this huge range, right? Kind of the context in this trade is that you don't assume it to just stop when it breaks out, right? If we're going sideways this long and the market finally does pick a direction, it's probably going to run pretty hard before we get some pullbacks. So we get that initial run, and then, okay, the market's probably going to consolidate, right? Once you get a kind of impulsive move, the market consolidates, and let's say you're still bullish on the stock. Okay, I want to be long Tesla once it gets out of this consolidation range. And I don't want to be bullish until we get, let's say, just as an example, let's say a daily close above the level, which is extremely conservative. Extremely. If we go down, let's see if we can find this, like even the 1 hour, maybe the 5 minute, if we can pull it back there. All right, this is even better. So let's say we're watching the pullback on this level. Tesla opens, we immediately get the opening drive. Boom, you're long. Let's say your stop is just below the gap here. Let's say it's something like this. This is the first 5 minutes of the trading day, so maybe you get into it. And then maybe you're just looking for, like a 1 to 2, 1 to 3, 1 to 4 breakout trades. You normally want them to be higher risk reward because you're going to be taking a lot of trades where they come back on you just for mean reversion. Okay, now what are the stats on this trade? That's what I want to know, right? Okay, so I got into this long. How much did it go against me? How much did it go in my favor that I didn't catch or that I did catch? Maybe it went in my favor a lot, but I didn't even catch this later move. I just, it was kind of stalling. I just took profit early. How long was the market consolidating before the breakout? Could I have improved my stop in either way? These are all kind of things that, you could put in your statistics. And that's what I would start doing. Go through some breakouts. They could be on altcoins. Altcoins, they work they work even better than stocks. And they move a lot harder. Again, they're liquid or more liquid than stocks, but they move a lot harder. This is just something I want you guys to start thinking about, right? And the kind of cutoff, I would say, is like 20, 30, 40 trades, right? And a lot of people say, when you start trading that, you should be in swing trading. I completely disagree. I think if you're an intraday trader, you get a lot of feedback a lot faster. You can figure out if you really do have an edge or not. If you take 30 breakout trades on extremely small size, you're going to know right away. In my opinion, I would not take these on paper trades. I think paper trading is kind of useless because then again, I told you trade psychology is useless, but what if you do find out you have an edge in this and then you try to start scaling it up and then, oh my God, you're scared about losing the money that's on the screen. So that's why I think you should take these trades live just with extremely small size, maybe one lot. And that's going to be, $300 in Tesla. So we went over what I think is most important, but now let's kind of go over what happens when you do have an edge. So once you do have an edge, it really should be mechanical. You're hammering your edge every day. And if you notice that, hey, I'm really taking profit early and it's really keeps going in my favor because I'm scared of losing money, but it should be statistics based, right? Oh, I'm always stopping out when I should be holding on to the trade. Okay, well, should you? Look at the statistics from these trades. That's why keeping a journal is so important. Psychology is going to matter, but you're also going to have the confidence to get into these trades when you know you have a positive expectancy, right? Positive expectancy means you can expect to make money from this trade. And over large enough sample size that if you take these, you're going to be profitable. So as long as you're not screwing up these entries and exits, you're following your plan, right? Whatever your edge is, you're following that, you're going to be fine. Psychology really doesn't matter that much. Now, maybe you're using huge size and you're worried about losing and you start tagging out early. Okay, then reduce your size. Obviously, that's a psychology thing. But to think it's the most important thing in the world, I think is just naive, to be honest with you. So just kind of wrap it up. Once you stop trying to fix your mindset and actually work on the process of how you're trading, you're going to get a lot better, trust me. Focus on getting an edge, focus on journaling, focus on statistics. Those are the things that matter. Psychology is kind of the top of the pyramid. The base is going to be built with an edge. Once you have an edge and you start hammering it out like a robot, then you can worry about psychology. You can worry about, wow, I'm sizing this trade up so big and I'm worried about a loss. Then you can worry about that crap. That stuff doesn't matter until you have an edge. So, guys, if you enjoyed the video, hit subscribe if you want. I have a free trading PDF. I'm going to link it below. Just got to shoot me your email, get it auto sent to you. If you have any questions, let me know in the comments.